Oh, let me get the risk disclaimers up. Okay, it should be sorted. Morning. Good morning. How do we do? Okay, really nice price action this morning. Really nice. I mean, not the pre-market range, but well, this isn't bad either. London was super good. We've got this Fair Value gap. I'm looking for this to be a breakaway gap. Actually, let's go into daily chart. Okay, so daily chart, we've got this previous day low that I'm looking at. Previous day high, I don't want to see it take because I've just laid it in the suspension block's lower quadrant. Now that we're rejecting the upper half of this wick, I want to see us make a break down lower into the previous day low. Then we can staircase lower with the volume imbalance gradients into the event horizon, and then overall draw would be the Tuesday low. But I don't think they'll reach into this today because that would be quite a big objective. 4 hour, still bearish to me because of this break lower. I don't think it'll be too hard to break through this bullish order block or this low, so I'm not concerned about those. Hourly chart, I want to see this left as a breakaway gap. Now, it doesn't need to be, admittedly. I would prefer it's left open because it would increase the speed of a run lower, but it can today move into that and then go lower because that's 2022 model. You can see reacted off that Fair Value gaps given this market structure shift after a displacement lower. 2022 model says it can react off this Fair Value gap and trade lower, or you have to make room for it to trade up into this one. So although I would prefer this as a breakaway gap, it doesn't need to be. So just keep that in mind. 15-minute chart. Asia nice consolidation. London trades up into this expansion from the PM session lower. Fails to make it past this resistance, or this support and resistance. And now we're in the lower part of the London session. Had a 3 drives that led to quite a big move higher with the news event at 8:30. Bit of a retracement. I don't mind us seeing these relative legal highs taken out. In fact, I would prefer it. Then ideally it gets caught up in these bearish order blocks or these 10-minute Fair Value gap or any of these gaps lower. Muted? No, I'm not muted. You had me worried. Am I muted? It doesn't say I'm muted. It says that the audio is fine. Okay. Yes, you then see. Okay. And then this London internal range liquidity slightly above the equilibrium. Possibly. Again, these are the highs right at the breakaway gap. So although I prefer this to be left open, it can run up into there and still be totally valid to go lower. I'm hoping it doesn't take the London high, because that would throw off my bearish bias and probably keep us in a bit of a hold for the rest of the day. If it takes this high, it just means that it's too much of a retracement, and that would be very frustrating to deal with. So overall, bearish going into the previous day low. However, we have areas of manipulation to the upside that can be tackled first as well. Regular trading hours. I'm going to start doing this more, where I look at previous day RTH gaps. So I'm looking at this one from that's that bank holiday one. Then also I'm looking at the one on 11th of February, 10 and 11th of February. Because if we rally, that's there. I don't think we'll reach that, but ideally it's going to go into and use yesterday's RTH, not yesterday, Tuesday's RTH gap levels. This is also a 2-minute chart, so I'm not using 2 1-minute charts. I don't think that's really very productive. And we also have these relative equal lows from the regular trading hours. If you look at this on the electronic trading hours, you'll see that it's already been swept. But when on the regular trading hours chart, it's still relevant. Still use that level. Even this PM session, sell side liquidity. If I put a horizontal ray on here, and I sync it, you can see it's been run through a bunch of times. But when we open up on the regular trading hours chart, it's still going to be referred to. Looks like it'll open up below it. That's also the pre-market high. This is our pre-market low. Also the data low. Pre-market low. Data low. Super good draw. From Pakistan, nice. Good morning, Zach. And Freddie and Kevin. And now we wait 2 minutes, 10 seconds. I forgot to open the New York chat. Okay, it's open now. Do your model plays every day? Yes. I have a bunch of models that they will always be there every day. When I'm doing these live streams, I'm not particularly operating off of one model. I'm reading price, how I read price. So it's the tape reading experience of me me giving you my experience in what I'm seeing. It's not necessarily a model. Sometimes I'll go specifically into a model, like we'll look at the silver bullet. We may expect a silver bullet to play out. We may look for a 2025. We may look at scalp. Okay. All of the opening range relatively got highs and lows. I take and accept this and this. Three, two, one. Okay, that's our opening range gap. It opened outside of the PM session, so I think it'll run up into this level 24,890 and the data low as well. So probably some purge and revert situation is going to occur. So that's the 9 a.m. relative equal lows. The opening range from 9 a.m. is 9 a.m. to 9:30. It's not a huge gap, it's 109 handles. That's pretty typical nowadays. So whereas when I did the silver bullet mentorship, the opening range gaps, it was only a couple of months ago, like 6 months ago, but even then it was a bit smaller. Typically, now we get 100 handles pretty regularly. This isn't considered large anymore. I would consider large 150 or above. But it also depends on the ranges that you're working within. That's the 9 a.m. relative equal highs. Can you teach me the science behind standard deviation levels? That would take a while. I have a video on that, I think. But I might have taken that video down because it wasn't very good. Standard deviations is just a symmetrical move. Well, it's just when you measure a move. So, say we have a price move here, and I'm measuring this retracement. I can take a fulcrum and look for one standard deviation away from this retracement. So, if I take a trade over here, along, I can use this as a target. All you're essentially doing is you're getting the move that you measure, and then you're splitting it in half. So if you see this rectangle, it's half. Then you add it to the move, that's one standard deviation. You add it again. I can do that. That's the second standard deviation. That's all it is. It's not anything complicated. It just looks cool. It also looks complicated, but it's not. Okay, ES. A lot less stopouts on ES compared to NQ right now. I've started to measure the manipulation and use standard deviation targets on PTRs and NQ levels. Nice. Okay, we'll see how they're treating this opening range gap, because if they keep bodies below lower quadrant, it would indicate they're going to run it into the data low and then towards the relative equal lows. But if they run it up into the opening range gap, consequent encroachment, and we see bodies close above it, because this is near the relatively equal highs, I would say this one is more likely, because it's 888 consequent encroachment level, and that's only 8 handles away from 297, and this is obviously a very strong draw. A lot of people are teaching wrong things about ICT, but you're authentic. Thank you very much. Yeah, a lot of people do teach it incorrectly and it bugs me, but it is what it is. That is the first presented fair value gap from 7 o'clock. Just thought I'd take a look at it. There's still no first presented fair value gap yet, so not the price action you want to be getting involved in. Give it some time. Okay, we'll look at the 5-minute candle here. Interesting. So it fails to reach into this fair value gap. This isn't bias or narrative because I'm just reading this. Because it can flip and go back into the consequent encroachment. So I'm not saying it's going to go into data low right now. but it's left this as a breakaway gap and failed to reach the consequent encroachment level on a 5-minute candle. So could be interesting, could be nothing. Don't FOMO in. It's the worst thing you could do. Okay, that's the pre-market low / data low. Swept. What makes you say it left it? Because it didn't reach the level. So it failed to reach the consequent encroachment. It failed to reach the breakaway gap. So in my eyes, because we had the data low, and that was a draw for me, we left it. Exclamation mark. Manual intervention. Not yet. Is there more first presented gap? Let's pick 9:30. Yeah, there's a lot. You can have first presented fair value gap of every hour, every session, every day, every month, every week. Okay, I'm looking to see if this is our first presented fair value gap or not. Yep, first presented Cibi. I'm going to do a video on first presented fair value gaps. It's just I've been also doing the income-based trading videos. I think those actually are kind of more important. Okay, you can grade that work. Okay, so I've got this low here as well, below the NWOC. My main look is for this one. It's a 2-minute bearish order block. Okay, I like that it's not closed anywhere near the consequent encroachment level. It stayed below the lower quadrant. It can reach up into this, and that is our 9:30 opening price as well. So any kind of little feathering above this level, it's a 2-minute bearish order block. It's the 9:30 open. It can happen, but I would expect it just uses this first presented fair value gap. So I'm looking at this in the through the lens of continuation, because I'm bearish, so I'm putting my bias into chart. But it could be pattern revert. Okay, that's that feathering. That's why you want to see it sensitive. Waiting for this candle closure so we can look at the 5-minute. Okay, it ran up above the first presented into 2-minute bearish order block, rejected the 9:30 open, And the 5-minute candle's kind of ugly. We have to work through this entire wick now, which is annoying, but it doesn't invalidate anything. It just means it's going to be higher resistance. What would, I dare say, confirm it, but kind of give me a lot more confidence is if these two up close candles here are closed below on the 2-minute chart. That would give me a lot more confidence in seeing it trade lower. I really wish we did touch the opening range gap consequent encroachment before we left, though. That would have been helpful. S&T with ES previous day low. I can take a look, but no, because NQ hasn't taken the previous day low, and neither has ES. Okay, we've met, I guess you could say, a resistance zone, the N-walk. Once see it cross through that, we did close below this 2-minute order block, which is very good in my eyes. I love that. Because it's such a strong close, it indicates to me now heaviness. So left a long wick inside that 2-minute bearish order block and slightly above the 930 open, which it rejected. Then it's done a similar thing with this 2-minute bearish order block. So I want to see that hold. And now that we've traded into it, I want to see it reject pretty quickly. The only thing against me in this trade is consequent encroachment of our opening range gap has not been met. Your knowledge is great. I'm new here, but you're nice. Wow. Thank you. Appreciate that. Okay, it's closed up above this order block now, so I would reset myself and just not do anything for a bit, because we still have the consequent encroachment here and the relative equal highs there. I wanted to see lower prices, and it kind of happened, but the relative equal lows here and the previous day low, clearly it's not interested in that right now. And because this is a sweep, reacted really nicely on the N-walk, it's probably inverted and going higher. Pakistan, a lot of people are charging thousands of dollars to teach ICT. Damn. Well, I teach for free. I do have a mentorship, which is paid, but I also teach for free. I have a free mentorship on YouTube. 4 a.m. smooth equal highs. The London highs are, oh, you mean these ones? Yeah, yeah. We said that at the start. Potentially it can go into there and still be valid, but I want to see it, if it's going to go higher, what I would prefer to see is if it does into these relative equal highs and then rejects from there, silver bullet. Rather than trading all the way into this, it would mean, it wouldn't invalidate my bearish bias, but it would be just a higher resistance to purge through the entire range that we, because if we deliver that much buy side, unless it happens really quickly and in a porous way, and we have plenty of time left in the session, it just makes it annoying to deal with. Oh, that's nice. 2 free mentorships, yeah, 2. The language barrier. Oh yeah, because I just use English. Well, you certainly don't need to pay anyone thousands of dollars. You get everything for free. Plus, ICT's videos are translated into, I don't know if it's translated into Urdu, but he does AI dubbing on his videos now. Yeah, the paid one's cheap. There's a free trial on there as well now, actually. PA is not that bad. If you know how to deal with, because this isn't PA like yesterday. Yesterday was bad price action, where even if you're good at dealing with it, it's still hard to deal with. But today is like we're tackling this pretty well. We read it mostly, and I said to reset yourself and chill, because it can do anything from there. I like the 2 minute. I like the 2 minute. It's decent on the 2 minute. But if you compare today's price action, yeah, it is bad, but it's tackleable because you can really easily avoid it. Whereas yesterday it was the first couple of minutes, the first 10-ish minutes, that was a little bit more difficult because it looked like at one point it done some buy side damage to this high, and it's going to drop lower. Then it faked that out, it faked that out, it faked that out, and that out, and that out. So that was more difficult for me. But I find this one not to be too hard. See you. Well, the reason for the lack of opening prices today, midnight, was quite far. And I kind of forgot to put on 8:30. I should have put 8:30 on, but I forgot. There we go. We have enough tools. We don't need the opening prices, but they're very helpful. Okay, the 1 minute super messy. The 2 minute kind of messy, but it's clearly still rejecting this level. The 9:30 opening price, which is this red line here. Anytime it's reaching into that, it's showing a willingness to go lower. Now, I'm not saying it's bearish or bullish anymore. I still think we are bearish, but at this current point, it can do pretty much anything because it can run into these highs and be bearish. But because it's so unclear on this 1 minute chart, I can't really give anything like as a when it will happen. I know what should happen. That's pretty unclear. $9.31. If it inverts that bearish order block, then consequent encroachment would look pretty likely. But that's if it inverts it, because it might not. SMT with the ES, with SMT with ES with the highs inside New York AM. Because it's consolidation, I wouldn't overthink that. Yeah, you're looking at this stuff. An obvious clean SMT can take you out of a consolidation, but because it's in pretty muddy waters, I wouldn't put a whole lot of emphasis on it. Okay, it didn't invert the bearish order block yet. Yeah, we've had 2 days of choppy opens. That's more like the stream thing. Here it is. Okay, I don't think it'll need this order block, but it is in a protected level. It's just that based on the strength, I don't think it will need this. Yo, Valorant, need a quick help in Eurodollar. Can you do it right now? What do you need help with? Yeah, pre-market high. Let's see, it's left open. Is there a lower objective in Eurodollar? Lower time frame or sell side? Or higher time frame sell side? Or... sell side. I'll check after this run's done, but I don't do analysis on the Eurodollar at the moment. Okay, it has taken the intra-session high. And because we're in some, I want to say the worst price action, but not great price action, but pretty much just chill. And I'd have paid myself something at least. was unsure, but I don't know if the objective is done yet or not. Okay, well I'm not going to do it then, because that's a signal. When URL short since 2nd of November. You've been in URL shorts for 3 months? 4 months? Damn. I respect it. And there's the pre-market high. It did invert that. So okay, it can, as we said earlier, reach into the highs that are right below this breakaway gap. I prefer it not to, because for lower prices, which is what I want now, ideally it does it from one of these SIBIs over here and then trades lower. But it can reach into these highs. I just don't want that because it would make the run lower, kind of high resistance, and not so easy to participate in. Best case scenario for me is it just reacts off one of these SIBIs really nicely and rejects. You'll notice I'm not using a first presented order block today. It's just because of how messy the price action here was. I don't use first presented order blocks every day. Okay, that's the opening range gap consequent encroachment within the first 30 minutes of trading. Reached. A quick peek. Never hurt anyone. You've got this bullish order block. Bounced ranges. What's this? Yeah, I'd say it's probably going a little bit lower. That ding dong, bells ringing. It's not, because the black belt is if the pre-market low or high is taken at 9:29, 9:30, or 9:31. Believe me, I'd be the first person to start ringing the bell. This isn't a black belt. It's just a classic pre-market high and low purge and revert. Sorry, sweetie. Yeah. We'll see if it wants full gap closure. I'm pretty chill. Right now, I'm not demanding full gap closure or rejection at the moment. I'm just kind of going to watch and see. This here is a primary market structure shift. If that can deliver nicely, then I would begin to look for that reversal lower again. But until then, just chill. Order block on 954 could turn breaker. Okay, let me just clear something up, because I've said this a couple times. If an order block is disrespected, it makes it an inversion order block. It doesn't make it a breaker block. Now, sometimes it can also be a breaker block, but the function is an inversion order block. So, yeah, sorry. It's different because breakers are about stopping people out. An order block is an institutional reference point that large funds use. So they use down close candles. That's banks and hedge funds and anyone with really deep pockets. That's them buying. Whereas a breaker block preys on retail traders. So whilst they can overlap, the function is different. So you technically treat them a little bit different. But I guess for most people it doesn't make a difference. But if you're going to be a fanatic about it, then it does. No problem. So you're not wrong that it's an inversion array, but it's just not a breaker, it's just an inversion order block. Not yet, but if it closes below, it would be. Okay. This is one of those cases where, yes, the primary market structure shift has been traded through, but because it left a long wick and we're in a bullish order block, I can't consider it a reversal, unless this is closed beyond. So if we can close below this bullish order block, it's given the market structure shift, yes, but it's not strong enough yet until we close below it. So right now where it's rallying, that's why, because it didn't invert the order block. Had it inverted this, then lower prices would have been imminent. But that's a combination of looking at how has it reacted when it took this low. If it had closed below it and there was no order block here to consider, I could still be bearish because it closed through the market structure shift. But because it left a wick, and it's a long wick, so it wicked in and out really long, really quick. If it had inverted this order block, I would consider it, but because it didn't, and it also didn't invert the order block, and it also didn't close through the market structure shift, it's hard to be bearish in a situation like that. Which is a mouthful for saying it's not weak enough. On to the notes. Yeah, you're welcome. Prince Andrew's been arrested. He was on the Epstein list. Yeah, thank God. Oh, look at that. Pretty big run up. Full gap closure. So that hourly gap that we were looking at the beginning, if you weren't here at the beginning, ignore this part because I spoke about it in depth. But we said because it's a 2022 model higher time frame, this is a market structure shift. It can trade into this gap and move lower, but it can also use the higher one. This is the 2022 model says, so we're allowing this to happen. I would prefer it doesn't. We've got a bearish order block, we've got midnight opening price. Best case, it doesn't even reach the breakaway gap. It's best case, but it easily can because of how strong that run up is. We'll tell you what, if that's an S&T, that's nice. That would be such a beautiful S&T. If ES can like take this high an NQ cannot take that high. Mwah. Also, this is a 15-minute volume bounce, or it's an hourly one, I can't remember. It's an hourly one. Yeah. Market Maker 101. Market Maker Sam in the building. Okay, that's a breaker block. Low, high, low, low, high, high. I'll refine it to this low. No, that's tiny. Okay, I'm not predicting it to reverse just yet because it didn't really tickle above midnight. Tickle above midnight. What is this terminology? It didn't reach above this, and that to me says it hasn't really gone into a deep premium yet. It's deep premium for the daily range, yeah, but it's not deep premium for what Power 3 dictates is the deep premium. So if the 8:30 open is down here, we're in a premium, but we're not in a deep premium. I want to see the deep premium, which would be above midnight and above 8:30. And then a rejection would be super great. It depends how we treat this breaker now. What I was saying is, if it had done this and then inverted the breaker, super clean run lower would have been, like, my guess. But because it didn't reach for midnight opening price, it can still rally and, yeah, move. This is the entire breaker leg from the high to the low. But, well, this will be the breaker block, I guess. Take that off. Order walk on the 2-minute. Reaches into the consequent encroachment, but falls ever so slightly short of it. We'll see what that narrative gives us. Another reason I find this hard to trust for a run lower is because it's a head and shoulders pattern. If you're a retail trader, you'll know this. Well, if you've been a retail trader, hopefully there's no retail traders in here. It's that really. It's a head and shoulders pattern. So if an ICT trader is looking at this thinking, oh, it's a breakable, I should go short, and we didn't reach into a deep premium yet. It's low probability because you're aligned with a retail mindset right now, where they're looking at this as a head and shoulders pattern. They want to see it go lower as well, so they're going to be selling. So to me, I would rather not be on board with what retail's also doing. I would rather be against retail. So if retail was looking at this for a reason to buy, it would give me conviction in shorts, but they're looking at it for a reason to sell. So because we didn't reach into the deep premium, it's not A plus. There's no like clean inversion level here. It's kind of hovering around this level, being held up by this inversion. I would not trust a sell right here. But that's just me. Let's tier these lows. Well, if this candle is a swing. 2-minute grey pool. I was eyeing this, but I didn't realize it'd been tagged. It's a grey pool. Not a beginner-friendly PD array, but it's consequent encroachment of the wick that makes a swing point. And then if it's a swing low, you look at the wick to the left of it if it overlaps. And then the difference between consequent encroachment of both is the grey pool. So this is the grey pool. He taught this in 2024 on Twitter. It was like a 3-minute Twitter video, I think. So he did teach that PD array, but not in depth. He's never gone into depth about it, and really I've only seen him mention it twice. He's mentioned dark pools, but that's not the same thing. Yeah, that's what I meant. Retail's being cannibalized today. And anyone that was chasing prices lower. Oh, that S&T delivered beautifully. There's a little bit of a deep retracement for an S&T, but it still went. Because, as I said, the head and shoulders pattern that a retail trader, not me, I would never use one of these, but the retail mindset looks at this and sees, oh, it's a head and shoulders pattern, I should sell. But we know, based off this, based off this, based off it not reaching into the deep premium. You see how all this narrative kind of pieces together bit by bit. Like, not reaching into the deep premium, that isn't game changing or trade changing information alone, but coupled with the rest of the ideas, it becomes a lot different. Okay, we have a fair value gap here. This fair value gap is really nicely laid in because at the point where we turn and go lower, this will be a very good inversion fair value gap for us. So it could happen here, it could happen later on. Whenever it happens, we'll be looking at this level. Take this breaker off for now. Closes slightly outside of the fair value gap, so that's not an inversion yet. So ES reaches into the SIBI and into that inversion gap. So if this one becomes an inversion gap, that would be enough for me, but it's not yet. So chill, just watching. Unfavorable PA. Yeah, but it is readable. It's not great. I admit it's not brilliant. Or it's not good, to be honest, but it is readable. Very difficult, though. Very difficult to navigate. Can be hard to get in sync, I think, for a beginner. Definitely. Yeah, definitely. Okay, inverted this for value gap. Pretty strong dangles candle. Don't chase it, please. Trust me, it won't go well, because that'll retrace. There's a strong S&T there. Okay, this I can see delivering lower. Okay, maybe not. There is an S&T of these lows, and that's a very strong up close. Really, you've got two PD areas here that would stop price, but it's interesting. But you've also got an S&T here. Funky. Yeah, difficult. Very difficult. 2 hours to open my fast. Not gonna lie, it's actually been very easy. Last year was very difficult, but this year's really easy. Market maker union will push price inside 10:30 to 11. Well, good luck, Mr. Sam. Make it move for us, bro. Let it rip. Okay, it broke the S&T to the upside. The downside one's still there. And it reclaimed this BC. We'll take it off though. I'm not giving a bias here because of how just crap the action is. Yeah, well, I'm gonna be off now because the price action is kind of bad. Nothing's really happening. Um, yeah, we spent kind of like 30 minutes doing not much. So, yeah. Well, it was a good live stream. We still managed to kind of navigate this price action. Very difficult, very boring. But we'll be live streaming again tomorrow, so I'll see you then for that one.